Good morning. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Mathew. And for the next 30 minutes, we'll take all your stock-related queries. You can write to us on any of our social media channels or through the WhatsApp number that will be flashing on your screen. You can also write to us on the YouTube live chat and we'll be tracking that as well. Now, let me introduce you to the guests for today. We have Saurabh Jain, Equity Head Research, SMC Global Securities, and Swati Hodkar, Senior Equity Technical Analyst, Research, Nirmal Bang Securities. Thank you so much to both of you for joining. Now, Alex, markets have cracked a little bit at this point, but what stocks and within the broader markets as well, how is that faring?
Yeah, in fact, let's take a look at the benchmark Nifty 50. You see that a bit of a wobble after, just over the last 1 hour or so, and it's quite a sharp fall. Relatively speaking, of course, in percentage terms, we're still talking about the drop of about 0.6% for the benchmark index. For the broader markets, of course, you have a little sharper cuts. So the benchmark Nifty Mid Cap 150 index down about 1%. You have the Small Cap 250 index that's down about 1.3%. Both of them trading very close to the low point of the day, and the Nifty 50 as well. In fact, let's pull up the advanced decline ratio, and that's probably going to give you an indication of how things have turned. And there is a pretty sharp divergence, as you can see. So what we're trying to get, and we'll get to that in just a bit, is why there has been such a big deviation midway through the session so far. But let's take a look at some of the movers on the sectoral end, and you have most sectors that are underperforming at this juncture. And let's pull up the key outperformers. There's only one index that is holding out in the green. The Nifty IT index that's up about 0.2%, but everything from media to PSU banks to realty, and even the banking index is down about 0.7% or thereabouts at this juncture, or 0.6% at this juncture. So it's looking just a tad weak right now. I want to go to Swati first. Swati, just to get a perspective on whether or not there are any indicators and levels that you're watching closely heading into the monthly expiry tomorrow, and any inkling as to why we're seeing a little bit of choppiness and volatility in trade today?
First of all, good morning to all of you. From the last 7 to 8 trading session, we are witnessing that the Nifty got stuck within the range of 22,000 to 22,200 levels on the higher side. On one day, we have seen that the Nifty somehow manages to show the pullback rally from 21,800, but back it got stuck within this 200-point range. A breakout on either side will decide the clear trend of the market. But from the last few trading session, on the intraday basis, we are witnessing that the Nifty somehow manages to put a tick above 22,200, but on the closing basis it doesn't. It fails to give the same. So I believe on higher levels we are witnessing a continuous selling pressures, whereas on the lower side it got stuck within the 22,000. If today we get a breakdown below 22,000 psychological mark, then more selling pressure is likely to be intensified, which might take a Nifty towards 21,800 to 21,600 levels. I believe that the market will like to face some selling pressure, whereas on higher side, as I said, 22,200 is acting as a very strong resistance levels. Unless and until we don't get a positive closing, at least for 2 to 3 trading sessions, a major pullback rally or the positive momentum cannot be seen into the market. So the view is a bit cautious. If we look towards the market breadth also, today is almost the market breadth is almost 1:5, which gives a cautious sign. The bears are just running their rise as of now. So I will suggest the view limit cautious, but any dips towards 21,800, 600 level will act as an opportunity to take a buy call. But at the current level, one should book their profits on every rise, I would suggest, as long as Nifty trades below the mentioned resistance level.
All right, got it. Let's dive into the questions now. The first one is from Sheetal, and this is for UPL. They've bought 300 shares at 657, slightly elevated levels. If you look at the current share price, it's somewhere around 481 rupees. Now, the shares have been on a downturn. Q3 results were dismal. Brokerages have downgraded the stock. Would you suggest getting out, book losses, or would you suggest holding on for a little bit more?
I think there is no point in staying with this company because, if you look at the numbers, they were quite pathetic. And the EBITDA front also, they have posted net loss. And all their business is chemicals and their pesticides, agrochemicals. All of these segments are not doing well. And I think there is a quite huge amount of debt on the balance sheet also. It's a quite large company, certainly got mismanaged. So I don't feel like staying with this company. I'll say exit from the company.
Having said that, so if you're saying exit on the fundamentals, do you like anything from the chemical space at this juncture? I know that it's going through a little bit of a rough patch, but if you're buying, say, for the next 3-5 years, would you pick any of the counters available right now?
See, chemical company name that is coming to my mind is Aarti Industry. I think this company is doing good. They have been able to bag a large order. The existing production capacity will be able to fulfill that order. And these companies are, trying to push their capacity utilization to the maximum. And yes, there is some kind of pressure on their margins, but I think over a period of time, they will be able to handle that also. And the valuations are now on the comforting side. I mean, from the peak valuation, now the valuations have also subsided. So from that perspective, I think one can look at this company.
So switch from UPL and perhaps look at Aarti Industries as an option if you want to stay with the chemical space, which, by the way, has had a rough couple of quarters and we don't know when the turnaround is going to take place. The next question is coming in from Sachin Marathe. He's writing in from Pune and he's asking about Larsen & Toubro. And it's had quite the run over the last 12 months or so. The stock is currently trading quite significantly above his buy price at 3,460. He has bought at levels of 986. He's asking if he should accumulate at this point. Smriti, what's the indications that you're getting on the charts right now for Larsen & Toubro?
See, the overall stock is definitely positive on the technical front. Is one of the very good stock one should be continued with in their portfolio as well. But since his buying price is at the current level, I will not suggest to average it out or buy at the current market price. If the stock continues on a deeps towards to 32, 3300 will be the good level to take a buy call. But at the current market price, I will not suggest. But the overall overview on this particular counter is really positive. I believe that it has a strength to continue this rally up to 3800 to 4000 levels in a longer term horizon. So my view is definitely positive, but current market levels, I am not recommending to take a buy call. Since its buying price, it's currently trading at the CMP only. Any dips it's coming towards to 3200, definitely one can take a long positions.
All right, got it. Next up, we have a question from Shyam Sundar on YouTube. Now they're talking about two counters, Repco Home Finance or India Bulls Housing. They want to invest into this from a 1-year perspective. Swati, either of the two, which one would you suggest, and what kind of buying levels and targets do you have on these two stocks?
See, if I want to compare this particular two counter on the technical front, I will go for a Repco Home because this particular counter on the monthly chart is on the verge of giving the breakouts. In the 2020 levels, we have seen this particular stock has just formed a high of 430, and in this month it has given the breakout after the 2 years of consolidation phase or some sideways momentums. So I believe on the monthly chart also the stock has formed the flag pattern, which is very attractive formation on the technical front, and it has given the breakout of the same with the decent volumes. Upside, I'm looking for a target of 550 to 600 level for a short term perspective. For a longer term horizon on the yearly basis, 700 levels can be seen. At the current market price, one can take a long position, but only 20 to 30% can be accumulated at the same peak because we are witnessing some hit at the higher levels. So any dips, if the stock is countering up to 400 levels, one can add on. And I'm looking for a short-term target of 600 to 700 levels.
Got it. All right. So Sumana Mukherjee is writing in from Kolkata and she's got the next question and she's asking about a couple of counters. There's Latent View as well as Indian Oil, which she has bought at levels of 467 for Latent View and about 68 rupees for Indian Oil Corporation of India. Of course, IOC has seen quite the run since she bought the stock at 68 levels. So the question is, should she hold on the basis of the fundamentals? Saurabh, what's the view?
See, I think latent view business, I think this sector has been, pretty much well taken by the markets and the valuations are not at the comforting level. I mean, the markets have already discounted forward year profits into the prices right now. So I don't feel like staying with the latent view because of the not comforting valuations. With respect to the Indian Oil Corporation, I think a lot of problems are there. I mean, the crude problem, the government can take measures on the retail price of the petrol and diesel. So there is a lot of hue and cry on this trade. So in that sense, I'll not recommend to buy again. Rather, I'll say book profits at current levels.
But what about IOC?
For the IOC, only I am saying.
Oh, sorry. And so latent view, it's already priced in. I got that. All right. Let's take the next question.
Next one's from Bhaskar on YouTube. They want to know if they should buy Canfin Homes. Now, Saurabh, from a fundamental standpoint, a good buy at this juncture?
See, rather than chipping into the home finance, I would say it is better to buy good PSU banks. For example, Canara Bank, Indian Bank, and Union Bank. All these banks are doing pretty well. If our economy has to take off from here, I think all the segments of the economy will grow, and the banks will be beneficial more than the only home financiers. So in that sense, I feel that it is better to chip in the PSU banks that I have spoken about.
Let's pull up Jio Financial Services because it's a counter that's gained quite substantially in the year-to-date period. Just over the last couple of months, this is a stock that is up as much as 32%. And we've got Tarun Agarwal, who is writing in from Ranchi, and he's asking about whether or not it can be bought at the current market price. He's also wondering about Aster DM Healthcare. What's the view on these two, Swati?
Talking about the Jio Finance, this particular counter as of now witnessing some sort of a profit booking because the stock has given a very spectacular rally from almost 250 to 348, 350 levels. So profit booking cannot be denied at the higher level. If he's interested to take a buy call, I'll be suggest to buy on deeps towards 280 because from the last 3 months, I'm witnessing a trend that the stock takes the support of 20 days moving average and again bounces back towards the new high. So I will suggest if the counter comes towards the 280 levels, one can take a long positions by keeping a stop loss of a 260. Then again, we can see some positive momentum towards to 320 to 340 levels. And another stock you was asking about Astral. Astral is definitely positive on the technical.
Let me clarify. It's not Astral. It's Aster DM Healthcare.
Okay. It's about Aster DM. This particular counter is also well placed above all the important moving averages and trading in the pattern of the high tops, higher formations, which is a very positive indication. So if you're having any long positions, they can definitely hold on. I'm looking for a target of 520 to 540 as long as this particular counter sustains the 450 levels, which is a support provided by its 50 days moving average. So one can hold the long positions, but cannot be created a long position at the current market price as long as the this particular stocks doesn't give the breakout of a 500 level. So I will suggest to hold the long positions with a stop loss of 450 for immediate target of 500 levels.
All right. Next up, we have a question from Rajiv Verma. Now, they're asking about HDFC Bank. And we've seen a bit of a downturn post the third quarter results. However, Saurabh, from a longer term perspective, would you suggest buying at dips for this counter?
Management has already suggested that they will be going at a tepid pace. I mean, they want to raise the share of the deposit, and they want to shed off the higher cost of borrowing which have come after the amalgamation of the HDFC. So I think it will take a while. I don't feel like chipping in at this time. I think wait for 2-3 more quarters, see how things shape up, how the CASA goes up and the high borrowing gets reduced, and what sort of advance growth comes in. I think it may take some 2-3 quarters. So for at this point in time, I think it is better to
HDFC Bank is a call from Saurabh. We have to slip into a quick break, Saurabh, as well as Swati. Do stay with us, and viewers, we'll be back on the other side to take more of your questions. So do stay tuned. Welcome back. You're watching Ask Profit. And in the break, we were having quite the interesting discussion here because one of our queries today, we've got Vimal from New Delhi who's asking quite the interesting question. He's asking whether or not you would pick or whether you would pick Devyani International over Restaurant Brand Asia. And in case you were not aware, this is basically a fight between KFC and Burger King. Smriti here says that she would pick KFC.
For sure.
KFC. So KFC. Why don't you guys tell us in the comment section what you would pick? And meanwhile, let me go to Saurabh to ask him about the companies themselves, right? Saurabh, not a question of which tastes better, but which would you pick?
I think KFC is coming with the novel ideas. They are coming with the new things, new restaurant that if I remember correctly. So I think in that sense, I think it makes more sense to chip in that cup.
But then would you buy, look, there are some people who say, I will buy KFC during the week and then I'll pick Burger King over the weekend. So why not pick both?
I think out of the two, KFC is much better.
Okay, fair point.
All right, next up, we have a question from Yash from YouTube. He's talking about this MSME lender, Ugrow Capital. Now, he wants to know, he wants a short-term and a longer-term view. So, Saurabh, do you have coverage on this stock, and would you suggest holding out onto it from a longer-term perspective?
I think Ugrow is in the finance, but it is a kind of a fintech company giving loans on the basis of some parameters, and by checking the credentials of the borrower through systems. I feel that these companies have grown quite rapidly, and the takedown that recently the RBI has taken on fintechs and something like that may not bode well for the future growth. So in that sense, I'll say better to avoid.
I believe we have a comment on YouTube, Smriti.
Yes, Sid also prefers KFC over Burger King. So
all right, so there you go.
That's the pick.
That's the pick. That seems
stock-wise as well.
I haven't got lunch today, so maybe that's where I should look at ordering from. We've got the next question coming in from Shrikant, and he's asking about BGR Energy, and he's asking why the stock is falling. Swati, on the technicals, is there anything to suggest why the stock is under pressure?
See, on the technical front, on the weekly chart, the stock has given a signal of the negative divergence in the last month itself. So that is the reason, and we have seen a multiple cluster resistance at around 120 levels. From the thrice, we have seen that the stock has tested a 120 but fails to give the breakout of the same levels. From there onwards, we are witnessing a selling pressure. I believe when this selling pressure is likely to be continued towards at least 45 levels, because that is the previous swing lows which has formed in the year 2023 in the month of the Feb, I guess. So till that level, we are likely to witness a selling pressures, but from there onwards, we will witness some sort of a pullback, because because over that period of time, stock will enter into the oversold zone. So long positions should be avoided at the current market price. If anyone is interested, wait for a dips towards 245 levels.
Okay. Next up, we have a question from Anitya Pal Kaur on YouTube. They're talking about the counter Trident. They bought at 40 rupees a share. It's currently around 42 rupees. From a technical perspective, Swati, how does it look? The holding period is 6 to 8 months. And I'm looking at 6 months performance. It's up about 15%.
Definitely the stock has given a very good rally in the month of Jan itself. Once it manages to give a breakout of 40 levels, non-stop it has performed up to 52 levels within a very short span of a time. As of now, the structure really looks very cautious, because from there onwards, we have seen that the stock has entered into the downward sloping channel. Interesting fact that it is trading in the formation of the low tops and low bottom, and it has also given the breakdown of a 20 days moving average. So there are the few technical parameters which are not in the favor of a buy side, but definitely we are witnessing a selling pressure on every rise towards 47 to 48 levels. I will suggest, if we are getting any pullback rally towards 47, 48 levels, one should exit their long positions. We might attract more selling pressure, which might take a stocks towards 235 to 38 levels. So avoid the long positions or exit the longs whenever you get any rise on the high side.
All right. Let's turn to a question on the healthcare space, and this is on Fortis Healthcare. We've got Mohit, who's tuning in from Ludhiana, who's asking about a stock. that he has bought. He's bought at levels of 270. His time horizon is as much as 2 years. Saurabh, the question is for you. Would you suggest holding on at these levels?
See, I think if the horizon is more than 2 years, I think there's no point. I think he can stick with the company. Fortis is doing pretty well. And all the if you look at the hospital space, be it Apollo or Narayana Dhale or more of like that, all are gaining traction in the market. And I think this space is going to grow at a good pace.
All right, next up we have a question on Vodafone Idea. The stock is cracking today, even though we late night we got an announcement that they're going to raise 45,000, 20,000 through equity. Saurabh, people who are holding on to the stock, and this one, Raman here, is holding 50,000 shares currently. What should they do with the stock?
16 rupees.
At 16 rupees a share, yes.
See, I have always said in my show, in all the shows, that it is no point in investing in company like this. There is a huge debt in the balance sheet, and the company is consistently making EBITDA losses. In the history also, when they come up with the right issue, that money got burnt in a matter of few quarters only. So they have lowest ARPUs in the industry. They are losing out their customer base. They have lowest ARPUs. So I think even if the yesterday announcement has come that company is going to raise 40,000 crore, but I don't think so. The fortunes will get changed. So in my sense, I think it is a sell.
Okay, Sri Kishore is writing in from Motihari in Bihar, and he's asking about Prince Pipes, which he's bought at levels of 600, and he's got 350 shares. He's thinking of holding this for the next 3 years. Now, Saurabh, this is another company from the allied industry to the real estate space, right? Correct me if I'm wrong. Building materials, it's a stock that has done well on the back of that play. Would you suggest that he can add on to his holdings, or do you think he should just hold on to what he has?
I think he can hold on this company. This company has proven track record, and things are pretty in their favor. I mean, if you look at the macros, the real estate, government spending, and all things, I think all the things are in the right tick box. So I think in that sense, I think it is better to stay with the company.
All right. Next up, we have a question from Abhinav Singh on YouTube. They're talking about Gujarat Pipavav. They say they're in notional profit of 30% on this stock. I don't know the buy price here. Should they stay invested for more upside, Swati?
Yes, definitely. This particular counter is really doing very well from the last 3 to 4 months as such. As of now, it's well placed above the important moving averages. The only concern is that it has entered into the overbought zone. So small profit booking cannot be denied at the higher levels. But if he's looking for a larger degree or for a long-term horizon, definitely this counter looks very positive on the monthly as well as on the weekly chart. So they can hold on the long positions for a target of 252 to 60 levels or on a higher size. If they want to keep a stop loss, they can maintain the long positions by maintaining a stop loss of 185 levels and hold their long positions.
All right, Swati, thanks so much for that view, and indeed for all of the answers that you gave us today. Saurabh as well, thanks so much for joining in and for answering all the questions. Viewers, we're completely out of time on this particular edition of Ask Profit. It's been a pleasure, as always, to bring the show to you from Smriti and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.